And we're live.
Yo.
Welcome, everyone. Welcome back to the Get Decentralized Podcast. We are Decentralized JPM, and we're all about cryptocurrency, blockchain, technology, play to earn gaming, and all things the future. Hopefully, you guys are ready to get decentralized.
Yo, what's up, guys? What's up? Welcome back.
Yeah, today I'm joined by my two mates, Phyllis and Jeno. Decentralized Phyllis, Decentralized Jeno. How are you guys doing?
I'm doing good. I'm feeling good. We had a long stream yesterday.
Yeah, we had like 16 hours of streaming.
16 hours streaming. I must say, it took a bit of a toll on me. I was a bit tired yesterday, but I'm feeling good today. I'm feeling good and ready to go.
Yeah, I went all day, man.
I'm fully recovered. I took 2 sleeps of 7 hours each, so I kind of
you caught up for both.
I caught up for the one night, and I had my yesterday's night sleep. So
GG's, guys.
I'm all good.
Sleep is important.
How are you doing, Mars?
I'm good. I feel well rested after just one good sleep session. I had like 7.5 hours.
To be honest, I don't know how I did it because after that stream I was gone, man.
Dude, I was so busy after that stream. I was still playing offline, and a bunch of shenanigans happened. And I had a lot of fun yesterday. Yesterday was good. It was good. So the Decentralized JPM stream week was good.
It was a good week as well. I had to miss one day, unfortunately.
Force wipe happened.
Force wipe. We struggled the start of the wipe, to be honest, but we got ourselves a decent base, and
By the way, guys, this podcast is a more serious take on our mission to get people decentralized, to get people on the blockchain, to get people into the technology, to get people hooked on it, and we basically want to educate people. If you guys want to see a more chilled, relaxed, laid-back side to us, join in on the streams so you can know what we're talking about when we open up the podcast and we recap on the week and everything like that. But I want to get straight into today. I want to have a conversation about cryptocurrencies, what they are, some of the advantages they offer, and have an open discussion on some concerns relating to the use of them. Also, how we might overcome some of the inevitable challenges we are facing with cryptocurrency and blockchain technology. In one of my streams, I had a conversation with a chatter called Aaron. He made me think deeply about some things he asked about Nioxa. For example, does it have any utility or advantages over normal ways of in-game earnings? Does it have any real-world applications? Which are all valid questions. I want to reiterate what I told him. My answer is yes, and not specifically of what Nioxa is now, but the concept and what it can mean for the future of gaming currencies, and not just Nioxa. I have formulated some viewpoints after careful consideration of a variety of topics, and I hope to answer and educate everyone viewing. So cryptocurrencies, guys, often referred to as cryptocurrencies or crypto coins, which are based on blockchain technology. In order to understand what sets them apart from traditional currencies or traditional finance is to know what blockchains are. What is a blockchain, guys?
So to put it very simplistically for someone who doesn't know what a blockchain is and just someone who just heard about it right now for the first time, it's essentially a network of people contributing to a certain ecosystem. It's information basically in a block, and they're all connected.
Everyone has the same role as well.
So if you think about a usual system from a company, let's say, for example, they all have like a central database where everything is stored, where everything is done.
I think that's a really important relation to like the technology we are using in today's day and age. Like how people are recording information, whether it be inventories, financial information, anything. Everything is basically recorded on databases on servers. In each case, like the internet, everything is centralized in a certain sense.
Blockchain, everybody is connected to like one big server,
I would say. It's essentially like it's almost the same concept, but just in such a much better way, because information can't get lost because so many people are contributing to that system, so it's not just one central server or one central entity that has control over the system. So what this allows people to do is you have much more transparency, security, and control over what you're doing. For example, let's say you don't trust this intermediary or this central system,
and you rely on whoever is in control of the central system.
So it's a lot of power, especially if you're in a you don't have any power. You just blatantly trust them,
But you have no other choice.
You have no other choice but to trust them. Now in the blockchain, information is so much more transparent, and you're actually contributing to that system, which makes it so much more reliable. And there's millions of other people contributing as well. It's just much better
And the
technology.
server can't go down.
Yeah,
Yeah.
it can't go down. It's up and running 24/7.
Yeah.
You're not reliant on any
Yeah,
central.
some of the advantages, I guess, related to blockchain usage.
Yes.
So
yeah.
it's a distributed digital ledger storing cryptographic financial information and other stuff, So I think the key word here is distributed,
Yeah.
It's essentially a peer-to-peer network where blocks of data are stored across different nodes on the chain. So what this means is, like as opposed to like a centralized system, you have a bunch of servers or computers acting as nodes to the blockchain, and all of them are different. Like they all link in with each other, and all of them are validating each other, and the information is spread out across the entire chain, as opposed to basically information stored on a centralized place. There are some concerns and questions that come to mind when you tell people that it's a distributed network and that it's stored all over the place. The first concern that comes to people's mind is security, which I want to touch on later. Like it does kind of concern me when I first heard about blockchains, and it's kind of synonymous with crypto coins and stuff, but it's not all it can do. It's like how is it secure, And I want to touch on that later. But yeah, it's a chain made of individual blocks. Fresh data is added to the chain in the form of a block, and then it's attached to the chain. So basically, if you want to add new information, you don't add it on a previous block. It basically creates a new block that is linked to the chain, and so it's an infinitely growing chain across all these nodes.
Yeah, a good way to see it is exactly a train.
Yeah.
So
Every time there's a new cargo or container, just add it to the train.
more information, and it's all spreading across and going everywhere, into the system.
Yeah.
So
a way to better understand blockchains is to backpedal and briefly look at how we store financial information currently. So how does this differ from traditional forms of recording financial information? It specifically relates it to financial information. I know databases and centralized servers can store any sorts of data, but like the topic of today's conversation, I want to kind of keep on the financial side. I want to talk about crypto coins and not all the other use cases of blockchain and like central systems and databases.
So you're talking purely of Web3 and financial.
I'm talking now in the sense of Web 2. Like, how do we currently store financial information? Do you guys know anything about that?
Only the bank has the financial information, I would say.
Yeah,
not
only
only banks. I mean, all businesses have some sort of ledger. You know,
but they work through one financial institution, for example, like bank, and that bank has all that information. Everything is stored in that bank, and they have all the power over the finances.
I mean, information is stored. I wouldn't say it's just one bank, but it's one system. Yeah. Let's for example, the banking system. It's not just one specific bank. All the banks are also interconnected in a sense, and that's why a good question to ask people is like, okay, well, do you trust your bank?
Yeah.
And if the answer is yes, okay, well, do you trust the bank running your bank?
Yeah.
That's why it's so much more complicated, and it's just not such a smooth system in my opinion. I don't trust my bank's bank. I don't even trust my bank.
I don't even know who my bank's bank is.
I mean, they're in control of your entire life.
Yeah.
It's hard to trust someone when they have such a vulnerable point of your life.
Yeah.
I mean, if your entire financial side of your life gets wiped from someone controlling it, they basically have control of your entire life,
Yeah.
Basically,
it's a game of power,
Yeah. Okay, but I wanna like get us more like in the line of this discussion. So basically, with today's discussion, I want to talk about like a blockchain firstly, and like how we store information currently. So back in the day, people used to like store information on ledgers, so they would literally call it ledgers. They would write up transactions, and then they would process that transactions, and it would be stored on physical stuff, paper. They would file it, and these days we've moved more digital, and I think that's what confuses people. I mean, we're already digital, and there are so many advantages of being digital over being physical, And but I think that's where people get like confused about blockchain technology. Is I think that they think, what's the point? We're already digital,
Yeah.
But basically, these ledgers are digitalized versions of the physical version, where you would write up transaction, and you would store it in a central place. I mean, instead of it being locked up in a room with a few people having access to it, which was in a certain sense safer than it is now being digital.
Yeah.
Because I mean, you're giving more people opportunity to exploit the vulnerabilities of the server and hack into the information.
Yeah.
But basically, essentially, not just financial information, lots of other information, but specifically financial information. These are all written up on digital ledgers. But instead of it, and I want to bring us back to the key point. Instead of it being like centralized, as blockchain is distributed, the current way is just centralized.
Yeah. So a good way I can explain it as well is, okay, so you've got paper, right? You've got a physical way to store information and to store value as well.
How we've been doing it for thousands of years, yeah.
Yeah, and why did people go digital with this? What's the inherent problem here? Paper
we don't have enough
can
paper.
get lost.
Yeah.
Its influence on the environment.
We don't also like it's a finite resource.
Reasons,
Yeah,
but it's also much easier digitally.
Yeah, and now you're digital, right? What's the problem with digital? So it keeps getting better. Every step keeps getting a little bit better. So digital, what's the problem?
Hacked,
especially central servers and central authorities can get hacked.
They have all the power over it.
They have all the power over it, so people have less trust in it. And if you don't trust it, you're actually smart.
Yeah.
Because how can you put all of your information, everything that is so important to you, in someone's hands? And over the course of history, we've just been burned, and we've learned that, okay, you cannot trust a central authority, even if they have an ethical standpoint over things.
Or a good idea, yeah.
Yeah, the problem is it's not going to align with your ideas.
Yeah.
And you can't align with 100% of the population's ideas, moral values, and things like this. So a central server is always going to break someone's trust. And over the course of history, we've just learned that central servers cannot keep promises, or central authorities. They cannot keep promises.
It's impossible. It's like you said, nobody has the same.
So that's how I can explain blockchain. It's another form to store information, to have things done.
Now instead of having it over an essentials location where, let's say in a big company situation where a group of 20 people have the authority to change it, they're only accountable to each other. Basically, they're not accountable to all the people using the database. So which makes blockchain technology so much easier to kind of explain. Instead of it being centralized and only a certain few people have access to it, it's weak in a sense that people that are more technologically advanced or know more things about IT, internet and stuff, they can kind of see weaknesses that some of these people might not see. These people need to hire a specialist, cybersecurity specialist, to strengthen it and keep unwanted people out of it. So it just makes it easier for people to exploit this system, and it also makes it
it makes it vulnerable.
It makes it vulnerable in a certain sense.
If something goes wrong, the server is down.
If
then you can't get your money out, or let's say, for example, you're also reliant on these people to keep their promise. For example, weekend comes, bank's closed. You can't send money, you can't really do much, and then you're reliant on them to open up on Monday again, and it's just not such a good system. It's also slow, It's also very slow. Like, let's say you send money to someone across seas. It takes days for the transaction to actually get to them.
It goes through different banks.
Yeah, and if something goes wrong, your money isn't even going to get there. So it's all a system of trust.
Well.
There's a lot of disadvantages to this centralized version of what we all currently use. I mean, everything we use is centralized. I mean, Google has centralized systems. I mean, all the videos we watch on the internet are on a centralized location.
Yeah, and you're so powerless. You're blindly trusting for your transaction to get there,
or anything basically.
Yeah.
And I think also one of the things, like the most important things, is accountability. I mean, it's difficult to trust people with very low accountability. I mean, if someone can easily change information on a centralized server without having to be accountable and having to tell people, listen, we changed this and that. People won't know when you change things. If, like, let's say you use your bank and they have a lot of information on a central system, they can just change things without people that use the bank or their finances without them knowing, basically, essentially.
And another thing is, like, a scary stat is, you look at some of the best Web 2 companies performing, like, in terms of uptime, like Facebook, Instagram, and their uptime does not even come close to Bitcoin. Bitcoin has been up and running consistently 99.99% of the time. Not even Facebook, Instagram, with all the capital that they have, come even close to this type of consistency. You know?
But it's hard to just go off, you know, because it's all connected.
Yeah, it's almost impossible because you can stop mining. Your computer can break down, and the system is still fluently running.
I mean, because it has multiple nodes. I mean, if some of the nodes go down, the system is still up. Because as soon as those nodes come up, all the other nodes verify each other. I mean, you'd have to have like a worldwide blackout for that to happen. You know?
Some sort of
but then the whole
global event.
But I mean, in our current situation, it's still in that sense a lot better, because if the whole world blacks out, we lose everything anyways, you know.
Everything's going to be down to banks. It's not just
all these centralized systems are going to go down too. So I mean, like, it's just harder to envision a situation where the entire world blacks out and you lose all your nodes, you know. But like, in a certain sense, like, it's inevitable for some stuff to be down sometimes. It's inevitable for servers to be down. It's inevitable for nodes to be down on a blockchain. But if that inevitable situation does arrive and it does eventually go down, your blockchain is still up, you know. As soon as those nodes come back online, they just validate each other and make sure all the information is still intact and the same way it was before. Because I mean, basically how it works is they're gonna verify and validate each other using hashes, you know. So if something is different, if the blocks coming on now have a different hash value than they had the previous time they were up, when they come back, they're not going to be accepted. They're not going to be verified and added, you know. The blocks are not going to be added again, you know, because they're basically altered. They have different hash values, you know. So that's something about it. This all hits quite close to home, because I'm learning how to be an accountant and stuff, and like, I'm learning how to use these centralized systems, how to record financial information, and like, I do not see a future where we're going to be using the same kind of system. I do not see a future where we're going to be using centralized systems anymore.
It's just not.
It's not possible.
Good, you know?
I don't believe, if people truly understand how awesome blockchain technology is and what the benefits are of it. And obviously there are going to be challenges. Obviously we're going to have to overcome some things. I do not believe like we're going to be keep using like centralized systems. We are definitely going to be using blockchains. So for me, as someone that's learning how to use these centralized systems, how to set up this information, I'm trying to envision a future. How are we going to move past the way we're using it currently? How are we going to incorporate blockchains? Because it's not a matter of like if, it's a matter of when. It's just it's that good, you know.
It's gonna come sooner than we realize, and time flies by. You know, like people are starting to use it more and more. Maybe one company, and the opportunities are immense. You know, like a way I can put it is, companies back in the old days, before the internet, when the internet came, slowly but surely companies started waking up to, you know what, I need to start getting my company digital, otherwise I'm going to fall behind. And all of these companies, like every single big company in the world right now, is on the internet. There's not a doubt about it. You have to be there to be competitive, you know, and it's going to be the same with blockchain. Like, companies now on the internet, they're going to see that companies are starting to slowly adopt blockchain, and at some point it's going to be so mainstream that all the companies are just like doing everything they need to just get on the blockchain, to get on to start using the system as soon as possible.
We're going to need resources. We're going to need people that know how to do these things. We're going to need people to, because I mean, if you're a company owner right now and you have to go digital, let's say you're a old boring business company, you've been around for a long time, all your records are physical, you need to go digital. You know how the records work, you know how the back end works, you know how to run the company, but you don't know any of the digital stuff.
You'll have to get.
You're going to need people. You're going to need people, whether it be the people that sell you the system to use, to come in and implement it for you and migrate everything. In the same sense, if companies and banks and stuff are going to go Web3, they're going to go blockchain, they're going to improve the digital aspect of this, they're going to go over to new systems, they're going to need resources and people to help them, and we have a shortage of that. You know, the integration and the acceptance and the adoption of blockchain technology is stunted by the fact that we don't have enough of these resources, we don't have enough of these people.
I mean, if you look at studies and everything. There's nothing about blockchain. Literally nothing. You can take courses on the internet and all these types of things, but if you look, like, a lot of things are coming in now, like web development, and more reliable institutions are popping up about graphic design, web development, and all of this.
Even they're still behind, because it should have been done 5-10 years before.
It should have been, and this is why blockchain technology isn't there yet. Like, as soon as everyone is starting to adopt blockchain, and I really want to make this clear, like, blockchain technology is not synonymous with crypto.
That's what I'm coming to.
That's a massive part of it.
It's great that you mentioned that, because I wanna alter the blockchain segment. I'm gonna segue into crypto, and it's definitely not synonymous with crypto.
It's completely a different. Like, crypto only uses the blockchain because of its
decentralized.
Because of the possibilities of it. It's not.
It's just the use case of it.
It's just a use case. Cryptocurrency is just a use case of blockchain technology, and this is important to understand, because a lot of people hear cryptocurrency and they think, oh well, blockchain technology.
They think crypto.
It's not the same thing. Blockchain technology is a technology to store data and to uniquely verify data, and it's such a secure, reliable system, transparent system.
Showed the perks of a blockchain.
Essentially, crypto was the first use case, or the first really mainstream use case of blockchain. But this is going to take over the healthcare systems, everything.
It's going to take over everything.
It's going to take over the whole world, to be honest. And I think that's where we're going to move into Web3 as
well.
And
I think like AI and stuff is also going to have a massive like influence on.
It's going to better it as well.
It's going to better the current technology. I mean, that might combat some of the concerns and the inevitable roadfalls and pitfalls and stuff we're going to have. But in comparing traditional forms of recording financial information and blockchain technology, what are some of the advantages using blockchain technology over the former? And I want to get into some of the specific advantages, so that this can just drive the concept of blockchain itself deeper into people that are interested in learning what it is. So in a blockchain, a majority of nodes must verify and confirm the legitimacy of new data before the block can be added to the ledger. So they verify each other. We've touched on this a little bit. This is why blockchains are considered highly secure, because you can't just tamper with one block, You can't just tamper with the information. You can't alter it without having to be accountable to all the other blocks, and across all the other nodes. This makes it very secure. As you can see, this prevents parties involved, no matter the involvement, from misusing the system, even if it's the people responsible for implementing the blockchain, Once it's there, once it's validated, verified, you'd have to change all of it, You'd have to be super accountable. So it's almost as if the blockchain holds itself accountable and the people using it, it will not crumble at a single point of failure. So basically, not any if some node fails, it won't crumble there. Like we said, it stays online. So in contrast, a traditional ledger system, a single person or a group of people can alter or make changes to the ledger without any oversight, So the people responsible for it don't have to be accountable to the people using it and to the system itself. They can change it, they can alter it. And also, it makes it very vulnerable for people to misuse the system traditionally. So this is just a very comparison between the two systems. What do you guys think about that? What are your thoughts on that?
Well,
some things we haven't touched on already.
If you have the power in the way things work now, you can do anything without. If you have the power, you can do it, and nobody can tell you shit about it.
They won't even have to know.
They don't know.
Why would you want to tell them if you do something sketchy?
But with the blockchain, I don't think anybody has the power to do anything.
Well, surely they have some power, but not enough.
Not enough to
tamper with information.
So there's nobody really that can do it. And that's
the thing is, you're relying on people's word in a centralized system, and people tamper with information. People change things, and the information is not even visible to you. It's not even, you can't even access that information. On the blockchain, you can actually go and look if you want to, you can go and look at every single transaction. You can look at all the wallets, you can look at, you can make sure nothing is tampered with.
Very transparent.
It's not easy to tamper with either, so it's not easily tampered with, and it's very transparent. So it's just kind of like a, why not do it? Why not get on it?
It can't go easily down. Like
we said, we touched on that.
I remember when Facebook and WhatsApp went down and everybody went crazy, and this can't happen that easily with.
What do you guys think about this? Like we talked about placing trust in intermediaries, placing trust in people, placing trust in your bank to basically be ethical, like not use your information, not tamper with it. You're placing a lot of trust in these people. What do you guys think about that aspect of it? Like if people start incorporating blockchain systems, wouldn't it make people much more trustworthy? You place more trust in the system.
You just trust the technology.
It's a good way to take out all corruptness.
It's a good way to combat corruptness.
Yes, like it's just. I don't know what I wanted to say.
It's just why not?
I think we have a big problem with trust in today's day and age, and with the advent of the internet, with things going digital, with a lot of these systems going digital. I think we have a major problem of trust in intermediaries and trust in people. And
the problem is,
but you don't have any choice. You don't.
You don't have a choice. What makes blockchain technology so amazing is the first time in a very long technological term or sense that we've seen an option, that we've seen something that gives people some power back,
Yeah, for sure.
Okay, so a blockchain is incredibly secure against cybersecurity attacks also. So this is the thing. For example, if an individual or party gains access to a certain node or multiple, the majority of the nodes will still verify and confirm the legitimacy of the new data or alterations before it can be added or altered on the ledger. This makes it exponentially more secure against cyber attacks or hacking if compared against traditional ledgers. Traditional systems are vulnerable for many reasons, and more even with the advent of digital databases that expose the system to cybersecurity risks. So if you think about it, like with it being like physical on paper in a room locked up, it would be much more secure against people getting access to it that have to physically gain access to it. But being digital, it's much easier for hackers, for example, to get access to these ledger systems. If an external party gains major access to the database on which all the financial transactions are recorded, they can alter or destroy it with little or no effort. Which is not the case with blockchain technology. I mean, you'd have to hack like more than 50% of the nodes. Which let's imagine a situation where one of the nodes being just as easy to hack as a database, like a central system. You'd have to hack all the nodes, or more than 50%. Like, let's say there are 500 nodes. I've told you guys this off camera, but you'd have to hack like 250 nodes in order to.
And one thing to make very clear is you hear about like, this guy's CryptoPunk got stolen, or this exchange got hacked, or whatever. The one thing to make very clear is an exchange is not a blockchain. An exchange is usually a company, and that's why they still get hacked. It's because these are actually centralized exchanges. A lot of them, they're much more centralized than you can think.
They make it easier for people to interact with the blockchain. But like, this technology is still so new, and like I said, we're gonna run into a lot of problems, and we're gonna have to run into a lot of things we're gonna have to fix. But like, you can't hack the blockchain. You can hack the company that makes it easier for individuals to connect to the blockchain.
And an important thing is, like, DeFi isn't supposed to be easily hackable, and what happens is, it's not the platform that gets hacked, or the blockchain that gets hacked, or the coins that get hacked. It's usually a copy of that website, of that platform that people come onto and they connect their wallets to, and then and then they have access to your MetaMask wallet. If you don't know what a MetaMask wallet is, it's basically a digital wallet, and so
that's the truest form of decentralized finance we have right now. If you have something in a crypto wallet, like MetaMask or any of these crypto wallets,
and DeFi platforms,
and they're like, that's on the blockchain. I mean, that's not an exchange part. That's like your funds are somewhere that no one can find.
The point of DeFi platforms like PancakeSwap, Uniswap, all of these are essentially to combat that exchanges are still too centralized, and that's why exchanges get hacked. Exchanges still have too much power, like FTX.
Now you can hack like like these exchanges as blockchain. And not blockchains, they're databases, because their information is not on the blockchain yet. Let's say FTX or I don't know. I don't know much about the whole FTX situation. Maybe that's a topic for the future. But Binance, maybe, like if you can hack their central database, like this whole Web 2 version of storing information, then you can basically like hack their information, all the users of that exchange. But you're not hacking a node. You're not hacking the blockchain that they're using, you know?
Like a DeFi platform is still very hard to hack, you know, because it's still decentralized. The thing is, what happens is people make a copy of that website, and this is people that are clicking on the wrong links. And this is why education about these topics are very important.
Being sensible, being all the things we already know about the internet, like protecting yourself.
Protect yourself. Make sure when you connect your wallet to some kind of DeFi platform that you're connecting it to the correct platform.
Like you can relate it to
an easy way to see if you're connecting is just to go to the Twitter and see if it's just actual.
I mean, Jano, if you go to a website and you want to buy a ticket or you want to buy a T-shirt or something, you connect your credit card information to that website, and it's a sketchy website. They're gonna empty up your bank. Like I was in this situation a few days ago. Actually, I really wanted to buy myself a new pair of shoes. These shoes that I like go for about, like in our currencies terms, go for about 5,000 Rand usually. And I saw this website, and the listed price was 2,000, but it had 50% off, and it was our country's version of this website. This is a UK country, by the way. And the shoes were on sale for 980. And just before I connected my credit card information, I Googled it, and it was a scam. It was a total scam. If I connected my credit card information to that website, they would have taken all my money. And I would never have gotten those shoes. So just in this way, people already need to be educated about like online security, like protecting themselves, not putting their information into wrong websites, wrong places, pretending to be the place that they're not, you know. And so in the same sense that you're saying now, fellas, like people have to protect themselves on the blockchain with this as well. I mean, it's much more secure inherently, but I mean, it's still there's still a lot of room for user error and your own fault, you know.
And one thing is, like, hackers are usually more on top of new technology than let's say centralized places or like companies, you know. Hackers are usually the ones that are testing the things out first, like with AI is the hackers are going to use these tools, and if you think they're not, you're wrong, you know. And usually they have nothing to lose either, like hackers. They will use this technology, see how it works and whatever. A company can't just jump straight into okay, we're going to use all these tools, we're going to do this and that, because it might mess up their system. You know, it might mess up something because it's still new, but hackers have nothing to lose. They can just test it out and they can use it without any consequence of So that's another thing. So you got to be careful. You got to be up to date with new technology, what is possible for hackers. And I mean, hacking is a problem with Web 2, even Web 1, you know, or Web 0, where you still used paper. It's like hacking is literally someone coming into the bank or
like getting the information they're not supposed to have,
getting their hands on it, you know, or bribing or giving someone. And that's why the blockchain is also more secure. There's no bribing, you know.
That's what I want to bring back to that point of accountability. I mean, instead of like a certain small group of people being accountable for the security, the validity, like the information. I mean, these people can't be corrupt anymore. They can't just sell out the information to people because you can't, you know, you alter it, you know.
But it's like I said, like you put your trust, you're not putting your trust into a person, you're putting it into
a technology. And the technology itself is really exciting.
The technology can't be, it's there.
The thing with code is, like, if you write a piece of code that has to do something,
it'll do it.
It will do it. You know, you can't alter with it or tamper with it.
It doesn't have a mind of its own.
Unless you alter the code. And at this point, is it even a blockchain? Yeah, it's not. Yeah. But like, I mean, there are probably ways in the future we're gonna discover some new technologies. I mean, just the rate of development we've had in the past past few decades, you know, like we don't know if there's something better than blockchain that might still come, and it's highly possible. But like, these blockchains are exponentially more secure than the systems we are using right now.
Yeah. And I mean, after using blockchain maybe for a century or 50, 60, 70 years, maybe there's going to be its faults as well, and there's going to be an even bigger improvement.
But there's always going to be improvement or something. No one. Nothing is going to be perfect ever.
I think we have a solid understanding of blockchains and stuff at the moment. So I want to move on to like the meat of the subject. I want to dive a little bit deeper. So I want to talk about cryptocurrencies, guys. Cryptocurrencies are hardly the only use case of this technology, but it has become quite synonymous with blockchain technology. I mean, if someone hears crypto or blockchain, they kind of relate the two, but it's not just crypto, you know? And so what we're going to cover today is mainly crypto, but I just want to make that clear, like Phyllis did earlier, like it's not the only use case. Apart from it being able to record transactions as a digital distributed ledger, it can also, for example, be used to store information, like you would store information on central databases about NFT ownership and DeFi smart contracts, which are all very interesting topics, but for another day. Unfortunately, I want to get into them, but we won't have enough time today to get into those as well. So now that we have a brief understanding about what blockchains are and why it's such a fantastic technology, I want to dive deeper and touch on the major use cases, being the store of financial information, more specifically cryptocurrencies, is how we're going to store the financial information on the blockchain. What is a crypto? Well, like, what is a blockchain, but what is a crypto?
You know what? A lot of people ask me, like, you know, you can't touch Bitcoin, you can't. What's the use of it? You know, it's literally. I would like people to see it as the currency of the internet,
digital asset.
I would like people to realize that the internet is all more and more important. People's lives are more and more on the internet, and cryptocurrency is a way for us to engage with Web3, with technology, and with the internet. You know, it's a way in which we can exchange value, in which we can buy things, and in a very safe and secure way, as we've spoken about before. You know, so a lot of crypto has a lot of different use cases. So it's hard to ask what is a crypto, because all of them are unique. You know, it depends which one are you asking.
About. Generally, you
know. It's a cryptocurrency. I think.
Like let's define a cryptocurrency. Like it's a digital currency. It's not a physical currency. Okay, it's a digital currency. If you want to look at like the currency we use, it's more physical. I mean, it used to be connected to the gold standard. So gold is physical. It's a store of value. You know, notes and stuff used to be connected with it. But now we're going more digital. Less and less people. I know Switzerland is like trying to go fully digital. You know, they don't want to get. They want to get out of a cashless system. You know, or they want to be a cashless system. So
I mean.
In that sense, you can't touch your money too. It's all just information. So in this sense, like finances are information. You know, our currencies like dollar and yen and rand and pound and stuff. It's all financial information. You know, because like we can touch it and we can feel it. I mean, we can touch and feel the notes, but the notes by themselves don't mean anything. It's what's connected to the notes. You know, it's a currency. It has value because it's a currency. And so when you go cashless, when you get rid of the actual exchange of cash, you know, which isn't the currency itself, it's just a proof of currency, you know, which crypto can somehow solve as well. We'll get into that. But like now you're only working with information. You're working with how much dollars do you have and stuff, and that's stored on on these centralized locations, you know.
It's fiat basically.
So in the same way, crypto is a digital currency. It's an information.
But it's I wouldn't say it's just I wouldn't really compare it to the fiat system or whatever, you know, because one thing, if you have a note, you know, you still have somewhat power of how you're going to spend this note, or how you're going to use it to your advantage without someone always tracking you. This is a big problem. Like, central authorities have so much power over digital.
They can see what you buy.
They can see what you buy. They can see exactly what you do. And the problem is not like, oh, I wanna do something illegal with this money or whatever. You know, I just don't want the power over me.
You don't want everyone to know what I'm doing all the time.
Yeah, like also people can start, if everything is digital, you know, like let's say you don't have notes at all, no cash. What can happen is people can literally start telling you can't buy this. You can't buy this. And for you feel like, as we've spoken about before, central authorities might not align with your moral values or what you believe is right or wrong. And what you believe is right or wrong is right. You know, if you believe it's right, it's right.
Yeah,
And,
in a certain sense.
And
Yeah.
Yes.
like you have some strange purchasing behavior, so you can't buy this anymore. Or something
Yeah,
like
but
that.
it's also control over a population.
Yeah.
Like, let's say you just can't buy this because of this. And in our country, we have a big problem with this because sports, for example, you can only watch it in one place,
Yeah.
you know, and everything is so controlled, and it's basically communism at its worst.
Disguised communism. Yeah.
Yes, and that's why digital currencies, especially cryptocurrency, is
It moves more away from it.
yeah, because now it's decentralized. People can't just track all of your behaviors.
Nobody
they can't
has
just
any control over
yeah,
it.
they don't have all that power over you. One of crypto or even Bitcoin's biggest shines and why it's such a thing for humanity is its power given back to you.
Yeah.
I think in Bitcoin's white paper, Satoshi Nakamoto said power back to the people, you know, and especially as we get more digital and digital with our currencies, let's say like Switzerland has no more notes, where are the people gonna find any source of, you know, feeling safe or feeling
having
having
their
distrust?
very well-deserved privacy.
Yeah, exactly that.
Yeah.
And that's why cryptocurrency, especially decentralized cryptocurrencies,
Yeah.
are such a blessing to the world, I think.
Let's look at a version of what crypto is used for at the moment. Let's look at Ethereum. Like, what are people using Ethereum and Bitcoin for? Like, I mean, I know that they have use cases and stuff, but what people have been using the early forms of them for is like, they're using them to make safe online transactions without any mediation, you know?
Yeah.
So that's like no major financial institutions have any control over these transactions, you know? Think about any transaction with fiat currency. Think about when you want to send someone in another country, you want to send your relatives or your friends, you want to send them money. Think about how hard this is. Think about your money has to go from your bank to a central bank somewhere in the central, and then it has to connect to that this currency's this land's bank, and then it has to get from that bank to his account.
And then you have to do all sorts of regulations,
Exactly.
taxes, all of these
Foreign
things.
exchange rates,
Rules.
Yeah.
And then you have
Fees.
to trust them, trust these corrupt authorities.
I mean, and these fees get high. These fees get really high.
If
I
you
mean,
want to send money over to an
and it takes long.
I know
and it's
crypto
not
has
up
fees.
all the time.
Like crypto transaction does
but
have
not-
fees, but
doesn't
like not
nearly
as
as close.
nearly as close.
Yeah.
With crypto, it's basically point A to point B. You're sending from this address to this address. No mediation.
Yes.
With traditional finance, it's like zigzag all over the place. You know, it takes 3 days or so, maybe a week. You know.
Yeah.
So
and you can't do it over a weekend as well.
yeah. So in this way, this is a major advantage of crypto. I mean, we can use crypto as safe online transactions with speed. It's fast.
So also Bitcoin was like the first crypto using this technology, right? Bitcoin was the big daddy. So what Bitcoin essentially is it can be used as a store of value because of its
Like
limited
the
supply.
digital gold, yeah.
Yeah, because of its limited supply, the supply cannot be tampered with. There cannot be more supply or less supply. Even gold, there can become more. You know, open a gold mine and there's a bit more gold in circulation.
Uses value.
So in that sense, it's no longer that scarce. You know, so Bitcoin is even a little bit better than gold in that sense that the supply cannot be tampered with, and then people use it for a store of value to transact. And then Ethereum came along and they just started building on top of what Bitcoin is. And they started incorporating use cases, you know, like staking. And then you have developments on top of this blockchain, like gaming and all of these stuff. And this is why Ethereum is like, I wouldn't say it better than Bitcoin, you know, because Bitcoin was just the initial one. I do trust Bitcoin more than I do Ethereum, especially because Ethereum is now proof of stake and no longer proof of work. Proof of work is mining, right? So now they're proof of stake, a lot more centralized. So because of like regulations and stuff, they had to kind of
that's the problem.
do all of these
People are
things.
still being forced into the centralized world.
Yeah, but that's why Vitalik Buterin, Ethereum has an owner. You know, Bitcoin doesn't have an owner, so that's also a very big part of Bitcoin. But then again, it's scary, you know, because what if the real owner of Bitcoin comes out tomorrow and maybe
How will you know?
eh?
How will you know if he is the real owner of Bitcoin?
Well, if he sells all his Bitcoin, you know, or if he starts tampering with it, or I don't really know, you know. That's scary.
Do you still think he can tamper with it?
No, but I mean tampering with it in the sense of selling his Bitcoin.
Like I'm
you know.
I'm listening to you, and like what I kind of can deduce right now is like what we're trying to say is not at all that crypto is the be all end all. It's the thing. It's it's the thing that people need to get on now, and it's all these things that people
sell your house and buy.
It's not that. I mean, I get a lot of questions, and I get a lot of people kind of we have debates and stuff about crypto, and a lot of them and their concerns are valid, because I mean, Bitcoin, or not Bitcoin, crypto isn't where it's supposed to be. What we're saying is the potential and the capabilities of this technology is so amazing that what it could be is worth it to invest your time, not necessarily your money, but your time learning about it, getting involved with it in some kind of way. The concept, the technology itself, what's backing it is so amazing. But I mean, there are still a lot of things, a lot of things to happen. A lot of people are going to get burned with it. A lot of people are going to make mistakes, and we have a lot of things to learn. There's a lot of road falls.
People are so uneducated about it. They jump in and buy some crypto, and then it goes to zero, and then they're like, "Oh, but this is such good technology. Why? What?" Human nature, I guess. We're gonna make a lot of mistakes. For example, Amazon. It's such a big company, and people trust Amazon so much, they buy on it, their product comes to their doorstep, the product is broken. And why do people trust Amazon this much? Because time after time after time after time, they've delivered on their promises. If a broken product comes to your doorstep, you're gonna get a replaced version of it. It always comes there at the given point in time when they say, if it's a bit late, you will get an email or something that will tell you it will be a little bit late. So time after time after time, it's proven that Amazon will deliver on their promises, and it should be the same with crypto companies. You can't just sell your house and buy this meme coin, because what backing is there? What information or what makes this one so special?
What have they done to you?
Why do you buy on Amazon but not some other kind of online website?
I've spoken to so many people across the board who invest in cryptocurrencies, but none of them know a single thing about tokenomics. And I've made this mistake myself, Oh, this project is the future. I don't even read the tokenomics, and I put my penny in. And this is a problem,
just put more into the supply and the price goes down.
Tokenomics, especially in cryptocurrencies, is very important. Bitcoin's tokenomics is very straightforward because the use cases are not that dynamic, because it's only basically a store of value and to transact. And this is already good. No, never. Bitcoin
there's fixed supply of
fixed supply, 21 million. It will never be less or more. So in the sense of Bitcoin, the tokenomics are less of an importance, but if you're playing with some of these gaming tokens, or you're playing with even Ethereum, where there's so much more use cases, the tokenomics start becoming very important, and knowing what the coin is about, not only the upper level of, okay, it's a game, you can maybe earn a little bit, but what is the coin about? How much of the tokens are distributed to players, to mining, to whatever the use cases of the specific coin is.
You can't just be looking at the concept and the idea and be like, oh, this is an amazing idea, this is an amazing concept.
Possibly it is an amazing idea.
It is an amazing idea, but what do they say about the actual coin? How have they set up the coin structure? How are they going to be making all these, how are they going to fulfill their promises?
Is the company going to be profitable,
Like in the same analogy of Amazon, I can make you a promise. I'm going to make you a promise of making an online store, and you can buy products on my store. And if you buy my product and I don't deliver on my promise, or I deliver on my promise 50%, and you get a broken product, you send it back to me. Like, the idea is fantastic. We know the idea is fantastic. I mean, Amazon's proven the idea is fantastic. And I'm sure when Jeff Bezos made Amazon, like, a lot of people thought he was stupid, and they did. They said that, but now we know it's proven it's a fantastic idea. The ideas may be good. And if I have the same idea and I don't deliver on my promises, I mean, the idea can only be that good.
The idea is just the tip of the iceberg.
What's backing that idea? We were the people responsible for fulfilling their promises,
you can have a much worse idea and do a lot more ethical business, and it will be more successful than a fantastic idea. And a lot of times a fantastic idea is unrealistic as well. Like, you can think to yourself, a lot of these meme coins or whatever, is the company going to be profitable? At the end of the day, that's the most important thing. It's not how much 10x, 20x can you make by investing in this coin. Will the company be profitable? Because if the company is not profitable, they're gonna how can they sustain that, you know? So if the company is not profitable, you won't be profitable. So they can make all these promises of it's gonna 10x, this is the future, or this coin will do this.
In a certain sense, that's kind of like a red flag if someone starts doing that. I mean, you kind of have to train yourself to like look past people's words, you know, and like what is backing what they're saying right now. And if someone is making some wild allegations and some statements about how good their coin is, or like what their coin is going to be in the future or stuff, can you kind of look at what they're saying, kind of see it as a red flag, and look deeper than that? And for this, people need education. People need to start, you know, learning about these things, you know. Because I mean, just like all these companies, some of them are going to be, you know, fakes, you know. Some of them are going to try and get money. Some of them are only in it for the profit, and others are going to be amazing. They're going to have an amazing concept idea. They're going to have good people backing it. They're going to have good systems backing it. They're going to fulfill their promises. And so what people just need to do is kind of like look into this, you know.
Educate yourself firstly.
Yeah, I mean, even us, we're in the process of just learning anymore, and that's in a certain sense what the Get Decentralized podcast is about. You guys can be learning with us. You guys learn with us. We learn together, and we adopt and pioneer blockchain technology in our own way, you know. A
big thing is also like a lot of people, like crypto has become very synonymous with investing and trading, or whatever you would call it, you know. And the reason for it is because crypto is one of the best performing assets of the last 10 years or 12 years, you know. It's literally the best performing asset, I think, out there. Maybe not the top, but very close to the top, you know. So people just see it as an investment tool, like put your money in there, you're gonna 10x. The people that are actually behind this and that are learning of the intricate parts of the technology and that are really learning about it, those are the people that's making money. The company is coming into the stuff, that it's them that's making money.
I want to talk about some use cases.
More serious investors that are making money, not the guys looking for the 10x, because what happens is you invest, you get a 10x, you sell it, and then you look for the next coin to put in, you know. And then you're not going to get as lucky as the first time, because you don't know anything
to really make money from crypto.
People try and get easy
but then
money.
You're going to lose it as well. You know, the quicker and the luckier you get by making money, especially in the crypto market, the quicker and easier it is for you to lose it. I've literally spoken to people that made a lot of money in a very short period of time, and then within one day, boom, it's gone, because everything that they did to make that money was wrong. So, but they think it's right because they've just been doing it, you know. And this makes me very angry, and this is stunting the growth of the industry as well. It's because people are just using it as get rich quick schemes or investments, and they're not really learning about the technology behind it, you know. And that's the problem. That's the problem we're having.
Okay. We talked about what a cryptocurrency is. Like, I want to state like a personal opinion that I believe we share. That cryptocurrencies are perfect form of finance for the internet. A lot of the transactions on the internet are international, and with a lot of international intermediaries like banks and countries being involved, crypto will offer a fast, stable, and secure way of transacting on the internet. This is just a better way of using finances on the internet. But like, I want to get into some things that, fellas, you touched on briefly just now. Why would people want to use crypto in general? And this is the question that I got asked yesterday. And this is going to lead into, segue into like the Nyoxa thing. Why would anyone want to use crypto in general, and not for the reasons most investors do? Namely capital appreciation, other reasons for crypto, real world applications. Does it have any utility?
Well, yeah, that's what with Bitcoin coming along and showing off this technology, essentially showing how good of a store of value it can be. And to be clear, Bitcoin is a store of value because it's
a hedge against inflation.
Yeah. It's limited in supply, you know, and as inflation goes up, Bitcoin's price will just go up with that, because as long as there's interest in it, even though it loses half of its value, you know, that's just you investing at the right or the wrong time.
Still, it's very high.
Yeah, it's still appreciated
essentially
more than most assets in the last decade.
The supply of money going in overtakes the supply of actual Bitcoin.
So
you know?
One of the biggest use cases, Mars, is exactly sending money. You know, transacting. And I don't know how can that not be already enough for someone to go, oh shit.
But why would people want to use it over normal finance to send money?
because it's more trustworthy, it's quicker, it's more transparent. So that's one of the big use cases already, you know.
Speed, yeah, like you just said.
It's a lot quicker, more transparent, more reliable, more trustable.
Because it doesn't have to go through all these intermediaries. It's point A to point B speed.
Yeah. There's no cap on how much you can send or what you can do. There's not that massive regulation on it, you know.
What do you think about accessibility?
Accessibility is just getting better and better.
Because like now you just need a computer.
Yeah,
and internet connection, and I mean, I'm not talking about.
You can do it on your phone.
I'm not talking about like exchanges and stuff. You just need a computer, intermediaries. You don't have to go through any credit checks, verification, anything. You need a computer, internet. You create yourself a wallet like MetaMask with a seed phrase and stuff,
browser, basically.
And you have your money there, and you can send your money to other wallets as well.
Yeah.
So it's for transactions. It's like the accessibility is much better. You know,
the
you don't have to open a bank account.
Crazy.
Like how fast is it to open a wallet? Just like that.
Yeah.
How fast is it to open a bank account? Not fast at all.
Governments trying to ban this is gonna lose the battle.
Yeah, they can't.
I really do believe
I don't see that they can.
Because even though they ban you from using an exchange or whatever, you know, there's always peer-to-peer. And a lot of countries that are the most strict and most, let's say, banned on these things are the countries that's adopting it most, because that's the people that trust the authority the least. You know, and they're adopting it at a rapid rate because they don't trust the authorities. Why would the authorities ban it? Because they have ulterior motives in the first place. And these people realize it.
They want the control.
Yeah, so
they
what
want
happens,
to be corrupt,
what happens in a country like this is, okay, now all of a sudden you can't send the money to your bank anymore. So what happens is, peer-to-peer, I have 2 Bitcoin to sell to someone in my area. You know, the Bitcoin's price is 37.2K, whatever it might be. That person says, I want 2 Bitcoin. He puts that money in your bank and you give him the Bitcoin. You send him the Bitcoin.
Probably give him a bit cheaper as well, because...
Well, if you want to, you know...
Well, he kind of has to, because why would he sell his Bitcoin? Like, why would you keep
because he's already made money on it, maybe.
Yeah, I know, but why not just sell it on an exchange or something, you know?
Because the government banned the exchange. You can't take it from the exchange to the...
accessibility from a peer-to-peer stance.
Yeah. So the government bans the exchange. The banks ban you receiving any money from exchanges. So now what happens is you have a bank card. You tell the guy, okay, I want to buy 2 Bitcoin. He sends you the 2 Bitcoin to your wallet address. You send him the money and boom, you know, there you have... You bought Bitcoin at 37.2K, and the reason that he sells it is because he's probably already made something on top of that, you know. It's just like, why would you sell Bitcoin on an exchange? It's because you've probably made enough, or you're managing a portfolio, so as soon as the price appreciates by 10%, you sell off 10% of your account or your portfolio, whatever it might be. So that is just the use case of Bitcoin. Now there are so many more use cases that we're developing.
Yeah, we're talking about crypto in general, so you can do lots of things. Yeah,
and if that isn't juicy enough, now technology is developing at such a
also
speed.
Also, safe and secure, we've already touched on that.
Yeah, now you can start playing games, earning crypto like Neoxa, which is fantastic. You know, you have decentralized finance, which is probably one of the most exciting aspects of cryptocurrencies. And there's a lot, you know, decentralized finance. You've got now gaming, and it's all kind of financial products.
And these are all private. All these transactions are private. I mean, you can, if you're like, let's say, some Federal Bureau of Investigation, FBI type thing. You can probably unencrypt, paper trail, trace it if you're working together with some people in the blockchain, if you're trying to catch criminals and stuff. But like it's from the most part, from like the average consumer perspective, private, like as private as you can get.
It's very private. The thing is, like, I've had someone telling me, okay, but if it's transparent and you can see all the transactions that's going on in the blockchain, which you can do, that is correct. It's how can it be private? Because you are not linked to your address, your wallet address. Your wallet address is there, and people can see what transactions happen.
Just a piece of code.
But who is this guy with this wallet or this wallet? You know,
numbers. You know.
Yeah.
Your personal information.
So it's very private. Very private.
So you kind of give the people that option. You give them back their ability to be. Feel secure and safe, and give them their well-deserved privacy back, you know, and then you trust in systems. I mean, if a bank kind of screws you over, you don't have to lose your entire, financial life, because you can kind of keep yourself safe in a certain way against a lot of these other forms of finance. This all offers the user so much control and gives owners of finance much more power. over the current financial system that holds them back. Okay, I want to segue into the actual gaming part of this. What would make a person want to use crypto as a form of rewards in games? Nioxa, basically. For example, what Nioxa is doing with coins and game servers.
Yeah, well, essentially, why wouldn't you want to use it,
Yeah.
If you're gaming, if you're an avid gamer already, why not own your assets, first of all? And this is very much part of the technology. Is
so taking
NFTs
into account all
well.
the benefits that actual crypto gives us,
Yeah.
like for example, the speed, the accessibility, all these things, and now you can basically like it's on an external place than the actual game, so the rewards aren't now in the game, they're outside the game, that interfaces with the game. You can transfer them between gaming economies much easier, or you can trade them for other gaming economies coins, so you really own your assets.
And you
if
can
you
also
give someone
purchase
something in the game,
in-game assets
I mean,
too,
you can purchase in-game stuff with it.
items or something.
Yeah, and your items you own, this is one of the biggest things, and I don't know we're not fully there yet. And like I said to this guy Aaron, I was really thinking hard about this. Like, it isn't like a valid, like he was right, it isn't valid at the moment. At the moment, Nioxa is exciting, but it's also a concept. Like, you can't use Nioxa is not a native Rust thing, Nioxa is a concept which makes it really exciting for native games to start incorporating this. But if you want to, like, let's say, purchase your in-game stuff on Rust with the coin that you earn from Rust, now you really own this skin,
Yeah.
You really own your items.
And now you can buy other games as well with the money that you
your
earn.
items,
Yeah, now you can buy other games. You can send Nioxa to your friends.
I can give you my skin.
I can buy a burger for my girlfriend over the weekend with Nioxa. And the thing is, like, this is an important thing. So I'm an advocate for how exciting Nioxa is, but I have not put in my own money towards it because
So
unlike Amazon, Nioxa has not gotten my trust over and over and over again. It's 1 year. The company celebrated its 1 year
new.
the other day.
Like I said, the concept's exciting, but it's not even a fully developed concept
is it
yet.
viable?
It's not even fully developed yet.
Is it viable? I think it is a very good concept that could become very, very, very profitable to all the economy or the ecosystem using it. I think it's a very viable idea, but did they get my trust enough as of yet? No,
And also the security aspect of it. That's something I want to touch on specifically with in-game rewards. Many times games have been hacked and people's accounts on their games have been wiped. They lost their accounts, they lost their skins, they've lost their in-game currencies, they lost all their in-game coins, their assets and stuff in the game. And sometimes it's very hard to recover that, But with blockchain technology, crypto coins and everything being so safe and secure that we've talked about this for a little while at the beginning of the podcast, the beginning of the episode, with it being so safe and secure, if the game gets hacked, your assets don't get hacked with it.
Yeah, exactly.
Which is
and if the game is built on the blockchain,
the game won't get hacked in the first place.
There you go.
So GG's.
Rust is not built on the blockchain, by the way, but the incorporation that they're starting to have in the blockchain is
like they're
immense.
starting to interface. They're like starting to experiment. So what I see Nioxa as is an experiment, and then like we can kind of test out these things. Like I said, many of the road falls and stuff, many of the pitfalls, many of the mistakes that we're gonna make, people can start testing out with Nioxa. So like I said, we don't invest it, like you said, we don't invest your money, we earn the money while playing the game.
And this is without putting in any bank details. So, not even my ID is in there,
nothing is connected to my Nioxa.
I'm so private right there that my wallet is literally, I can create a wallet, I have a seed phrase for my wallet, I can make a password for the wallet, and they don't know nothing about me. All I do is I contribute to the system, I use the system or the piece of code that they put in place, and I earn these coins while playing, and they know nothing about me. And they deliver on their promise. Every morning I get my Nioxa, you know? And whether Nioxa will increase in value is a question of time, and a question of are there ethical and are people adopting it? Is it viable? Because a lot of ideas you literally can't. If you say something definitely is viable and something definitely is the future, then you might be a little bit arrogant, especially with some suspicions. Like for example, this DeFi platform comes out like Luna. Luna went to zero, one of the cryptos that basically lost all its value, and they had this integration with stable coins, and they were giving away a lot of rent, or what is it called in English? Rent, right?
Interest.
They were giving a lot of interest. So is this sustainable? Let's wait and see. Is it gonna work? Boom, it goes to zero.
It's all a matter of time. We can just look at this as a trial run, basically. Treat it as an experiment. Treat Neoxa as an experiment. Treat any coin you get for that matter as an experiment. Unless we're not talking about investment. I want to stay as far away from capital appreciation in the crypto market as possible. I will never be giving advice on that because it is just all over the place sometimes. I'm definitely not an expert, but in terms of the use cases of crypto and what we're excited about crypto, treat it as an experiment. If you put $10 into crypto, whatever you do with it, whatever you use it for, if you just earn it on a proof of work server or something like that, treat it as an experiment. Make your mistakes, do the trial run, learn the technology, and then get ready for the future.
Make mistakes with the least amount of money possible. And to be honest, you can make mistakes without using any money in the crypto space. I'm a big advocate for investing in things like Bitcoin, for more of some of the stable companies. If you've done your research, if you know what's going on, first learn about blockchain.
Advice,
so first learn about blockchain, and then you can decide what you want to invest in. If you're going into some of the more intricate parts of crypto, like Neoxa, which is just a concept as of yet, a very good one.
It's a running concept, but it's a concept.
It's a concept, and will it work? Will it not work?
It has a
Do
use
not
case.
Invest your house into this.
Don't put yourself in a position to lose everything.
Even though it's exciting.
Don't max out your credit cards. Don't sell your house. Don't get a loan. Just earn the money from the game and play around with it, I guess.
If you put your house into Neoxa and you get rich, then.
I mean, then you've won the lottery.
I'm just not going to tell anyone to go out and spend money on Neoxa. Obviously, if you know what you're doing, if you know this technology, if you trust Neoxa, if you're a fan, if you see some opportunity to do that, and it's your own decision.
But I mean, if you're well educated about the topic, right?
Yeah.
You're not gonna anyway get hurt if Neoxa dies, because then I can't invest more than I can lose. This is one of those situations where I can invest a little bit and make a massive return. Where with Neoxa, if it comes off, you don't have to invest your whole house, as I've said, to make a big return. You can invest a little bit and take a chance. If you know the tokenomics, if you know everything, you know the team, you really trust in it, you trust in the concept. Why not, especially if it won't hurt you losing the money that you put in the first place. And if you know what's going on, that's how you will do it in the first place. And of course, you can dabble a little bit here and there. You can maybe put some more in here because you trust more there. But across the board, if you will cry and you will want to really do bad things to yourself after a company fails, you've not done it correctly,
Yeah. So, thank you guys.
Thank you very much, Mark.
Thank you.
It was fun.
There's a lot of things that I learned that I want to touch on in the future. I want to get into all the concerns I have about this stuff. Have some open conversations about that stuff, all the other sides, all the other use cases and stuff. But that's the time we have for today. And hopefully everyone watching till this point, hopefully you guys have learned something new. Hopefully this has answered some of the concerns and questions you have already about blockchain. Maybe this has taught you something if you don't understand entirely what it is, in a very simple term, what a blockchain is. So
take part in the conversation.
Take part in the conversation. So we have a Discord, community Discord. You guys can join it. The link will be in the description. Join the Discord. There's a thoughts tab right below where I post the podcast on the Discord. You guys can create a thread. You guys can, or a topic basically. You guys can ask some questions. We'll be more than willing to help you. Yeah, basically, just join over there, and hopefully you guys get yourselves decentralized. Thank you so much.
Right.
Bye bye.
Thank you very much. Cheers.
Peace.